Is Bitcoin ready for a reversal this week? What we can see when we look at a higher time frame Bitcoin chart is that I have a very clear potential trade idea in mind, because you guys know that I absolutely love to trade ranges. And when we look at this high time frame chart for Bitcoin, we can see that Bitcoin is still trading inside of the previous bull market range. What we can see is that we have range pivot 1, range pivot 2, leading to range pivot 3, which was the previous all-time high for Bitcoin, giving us a high probability range. Now we can see that after a deviation of the range low, we went on to the range high liquidity pool. Now we are looking at a potential range high deviation, and usually when we look at a range high deviation after a range low deviation, there is a decent probability that we are going to test the mid-range as long as the quarterly level doesn't hold as support. Now we have been closing beneath that quarterly level, which in my opinion higher the probability for a potential test of the mid-range. This also means that we have to analyze a potential trade setup around the mid-range. Now in my opinion, there's two ways of potentially trading Bitcoin. The first way is indeed the potential trade around the mid-range. So when we analyze the mid-range, we quickly want to apply the range high like this, and when we zoom into the local price action on the daily time frame, there's something very interesting going on around the mid-range area for Bitcoin. Because what we can see is that we have this previous consolidation area over here for the Bitcoin price. This is where demand was coming into the market, and this demand that was coming into the market over here led us to a new all-time high over here. It started the impulse, and we can see that right now the people that are looking to long this pullback over here, right, get into the mind of the retail trader. What would be an obvious area where the retail traders are going to place their stop loss? Indeed, beneath the start of this impulse, beneath the low of this consolidation. So I think there will be many stops resting right over here for the Bitcoin price, which means that there's a lot of liquidity resting over here. Now we know that smart money always tries to fill their bags where there's a lot of liquidity resting. Currently there's a lot of liquidity resting over here around the mid-range area, which is also the area that after the deviation of the range high could potentially be visited by Bitcoin. Which means that around this area, I'm definitely potentially interested in swing longs for Bitcoin. Now this is not the only confluence that we have around this area. Also on a weekly time frame, when we zoom in, what can we see? Around that area where we have this weekly fair value gap, and a little lower is where we have another strong bullish weekly fair value gap for the Bitcoin price as well. So definitely an area of interest potentially for me. On the monthly time frame, what can we see? Around this area is where we will fulfill that monthly bullish fair value gap. Definitely another nice confluence as well. And then on the daily, what can we see is that we have this previous supply area that was being formed by the Bitcoin price also aligning with that indeed mid-range area. So this area is definitely becoming very interesting to me. A potential sweep of this major liquidity low over here beneath that consolidation phase into that mid-range could provide massive swing long opportunities towards brand new all-time highs for Bitcoin, because simply analyzing from a range perspective in confluence with market structure, in confluence with liquidity, what do we have over here? Look at it in a very simple way. We have bullish market structure on the weekly time frame. Guys, I will explain to you guys once more that this, what we are looking at over here, is not a weekly market structure break to the downside. Yes, it's a local downtrend that we are looking at over here, but a higher time frame trend is still towards the upside, since the low that we are breaking through over here did not bring us to a new high compared to this high that brought us to this low. So it's not a significant low to break. Okay, so it's only a local downtrend and not the main trend. The main trend is still towards the upside, since we are forming higher highs and higher lows until proven otherwise. So that is something to keep in mind. We have bullish market structure on the weekly time frame. We have a local market structure that is to the downside on the daily and weekly time frame. But we are still range bound until proven otherwise. We have major liquidity resting right above the mid-range area. What if I taught you guys that we can only play important range levels if we have a valid inducement above that range level or beneath that range level, when we want to short, obviously. Now currently we know that when we look at this from a range perspective and a deviation perspective, is that after a deviation of the range low, you should be visiting the range high unmitigated liquidity pool. But right now we have mitigated the range low liquidity pool and we have mitigated the range high liquidity pool. Now you want to look at a trend, and the trend is still towards the upside. So as long as the mid-range area holds in that case, right, and you can deviate beneath it, you should technically be expecting another test of the range high level, which is exactly what we are going to do. If we get a sweep of this liquidity low that I just talked about into that mid-range, I will be opening up a swing long position over here on the Bitcoin price with a very clean invalidation. The invalidation is this low over here. The target is a brand new all-time high over here, because we have equal highs right above the range high area, which is close to a new all-time high. This is still our draw on liquidity. Why is this our draw on liquidity? Because this weekly fake break of structure is engineering liquidity over here, because many people are shorting the breakdown over here with the stop loss above these highs, targeting these equal lows over here because of the weekly fake break of structure, because they think that it's a valid break of structure. So they're basically engineering liquidity above these equal highs because of this fake break of structure on the weekly time frame. So if we get another flush into the mid-range, I will be opening up a swing long position on Bitcoin with my first entry over here towards the new all-time high, towards my first take profit target. That's an RR of 2.18. Afterwards, I will be targeting 90k for Bitcoin, and towards $90,000, that's an RR of 3.87. Now this is a huge swing trade, so go low on leverage, higher on risk. You can, for example, risk 2, 3, 4% of your trading account, of your investment account, since you have a very clean invalidation and a very clean target and a very clean setup. Go low leverage, a little higher on margin, and keep your risk anywhere between 2 and 4%, since this is a big swing trade for me. Now that was trade scenario number 1. Trade scenario number 2 is super clean as well for me, because when we look at trade scenario number 2, we first have to analyze this local range over here. We have this higher time frame quarterly level, but that higher time frame quarterly level aligns with that mid time frame range low level, which is this area over here. Now this area over here is in my interest. Why is this in my interest? Because when we analyze the local price action a little lower down over here, so we have been breaking down out of this range low after we saw a deviation of the range low level over here, and currently we are forming potentially some interesting market structure over here, since we have formed a high, a low, potentially right now a higher low. If we break through this high over here, right, I'll be looking to short the price of Bitcoin over here upon the right confirmation. Why? Because in that case, we are putting in a fake break of structure. Why is this a fake break of structure? Because this high did not bring us to a lower low compared to this low that brought us to that high. So it's not a significant high to break. We are forming a fake market structure break into that range low level. I'm not blindly going to short the price of Bitcoin, but if we form low time frame confirmation over here, for example in the form of market structure like this, I'll be looking to short Bitcoin over here, invalidation over here, and as a target a new low. Because the second long scenario that I'm anticipating for Bitcoin potentially is to get a sweep of this local low, followed by a push up by a valid break of structure. In that case, we are forming a valid break of structure that is providing a bearish retest of this obvious range low level. Now you guys know that I've taught you guys, if price is truly bearish after such a breakdown, or if price is truly bullish after a bullish breakout, it doesn't provide perfect retests. Why? Because if it provides these perfect and obvious retests, everyone is able to get in on the move. And there's never the case in a market where the majority of the market is making money, right? So if that's the case, you always have to wonder, should I trust this retest? And in my opinion, if we get a local sweep of this low, followed by that perfect retest, in confluence with a valid break of structure to the upside, we have a valid long scenario up on the pullback, targeting brand new all-time highs over here for the Bitcoin price with a very clean invalidation and a very clean target. So in that case, the setup would look something like this. I'm looking for a sweep of this low. It can be from here, or we can first put in a fake break of structure and then get a sweep of this low. Break structure, retest of range low, you can play it up on the pullback, or you can go with an aggressive market entry over here. Aggressive market entry, stop loss beneath the local low, and as a target, a brand new all-time high for Bitcoin, exactly also offering us an RR of exactly 2. So 2 beautiful potential swing long setups on the Bitcoin price. First one is expecting a little lower prices, which is still very much possible. Second one is anticipating a range low reclaim on the mid time frame with also a beautiful 2RR setup, and eventually you can extend your targets towards $90,000. Important is to realize that first we need more confirmations, we need more price action in order to engage with these setups. But right now I'm also eyeing up a potentially very interesting setup for the Ethereum price. When we look at the Ethereum chart, we can see that all also Ethereum is still trading inside of the previous bull market range with a range pivot 1, 2 and 3 leading to an all-time high with a range pivot number 4, giving us a high probability range. We can see for Ethereum we have been rejecting strongly off of this quarterly level over here. Right now we've been visiting some more sell-side liquidity over here, in which we have been sweeping the local low over here. Now, more importantly, when we go to the daily time frame, what we can see is that also Ethereum is range bound, right? So when we analyze this as our range low, we can analyze this as our range high, giving us a high probability range since we have 3 different range pivots. So if I'm applying this range onto the chart like this, we can see that when I remove the higher time frame range for Ethereum, is that we have this lower time frame range. Now what is interesting to me is that for this range, we haven't swept the range high liquidity pool, but we also haven't really mitigated the range low liquidity pool. So when we look at this from a range perspective, we can see potential range low deviation should be leading towards a push towards the range high liquidity pool, right? Very, very simple range trade. Now, there's 2 ways to play this range low deviation, right? There's the first way of waiting for a push in towards the range low liquidity pool, wait for market structure to confirm the reversal and the reclaim. This is your first long trigger for Ethereum, right? Very clean invalidation beneath the range low deviation low, target range high liquidity pool, offering a beautiful RR of approximately 5. The second way of playing this, and this is a way that I might be anticipating for Ethereum right now, is to potentially, if you have the right confluences, anticipate this deviation to be confirmed by laddering in limit long orders over here, as long as you have a clean invalidation and a clean target. Now that is possible as well, and when we analyze this local structure on Ethereum, what I quite like about the structure on the daily time frame is that we definitely have quite some liquidity resting over here beneath this low, right? Many people that either longed this push up or this correctional wave down have been using this low as their stop, right? This is a tight low to use a tight invalidation, and retail traders are greedy creatures. So that means that there's a lot of liquidity resting over here. Now, where's the liquidity resting? The liquidity is also exactly resting where we have this bullish breaker block. And the breaker block has a beautiful inducement right above it because of that low that I just marked out. And that is something that I do really like about this chart. Also on the weekly time frame, we can see that around this area is where we have this bullish weekly fair value gap. A little lower is where we have another bullish weekly fair value gap, and this bullish weekly fair value gap aligns with that previous bearish weekly fair value gap. So that is definitely an interesting area as well to me. So for Ethereum, we have 2 very interesting high time frame POIs on the higher time frame, in which we have this bullish breaker block, we have this inversion aligning with that bullish weekly fair value gap, where price can potentially rebalance. So 2 potential interesting high time frame POIs. We have a clean invalidation, which can be beneath this low over here, where we saw that local bullish liquidity sweep before this break of structure. Then we form this higher low, then we start this impulse. This is the low that we should use as our invalidation. So we have a clean potential setup anticipating that range low deviation. Invalidation, then as a target, range high liquidity pool. First potential entry, and then we have another entry around that weekly bullish fair value gap, where we also have that inversion. You can enter on top of the weekly bullish fair value gap, offering us an RR of approximately 4.5, or you can enter at that inversion, at the top of that inversion, over here, offering an RR of 5.36. Now you have to realize something. First entry is offering an RR of 4.5, right? Second entry is offering an RR of 5.36. And this is something that is quite interesting. This is something that my partner Justin has been talking about a lot lately, which is the Forex trader in our community. He's always stating that he uses market entries a lot, right? Now, why does he use market entries a lot and he's not aiming for the perfect sniper entry? Because, for example, in this case, we are risking a difference of approximately 0.8 R to miss out on a potential 4.5 R trade. So basically you're risking 0.8 R to miss out on a potential 4.5 R trade. And now long term it's not worth it, right? Maybe this time you snipe the perfect exact entry over here, but the next 2 times price fills over here, right? Front runs that perfect entry at that inversion and then shoots up. So in that case you miss out on 4.5 R twice in a row, to 1 out of 3 times, for example, or 1 out of 4 times, get that perfect entry and gain an extra 0.8 hour. Now, long-term wise, it will not be worth it. So in this case, I would be looking for more of an aggressive entry point instead of sniping the perfect entry point to potentially miss out on the entire trade. And that is something that as a trader, you should always realize. And that is something that as a trader, if you get the confirmations, don't always be too greedy with your entry points. And that is also one of the reasons why I'm always using 2 entry points. My first entry is always a little more aggressive, not always necessarily discount when I'm looking for longs, not always necessarily premium when I'm looking for shorts, just a more of an aggressive entry. Because if price action, market structure and liquidity are giving me the confirmations that I can look for a trade setup, I should engage and I should make sure that I position myself with at least an RR of 2 or 1.9, 1.8, because once price gives me the confirmation that it should seek higher prices or it should seek lower prices, and it gives me clear invalidation, I have to be positioned to make profits. Because otherwise, my analysis can still be that good, but if I'm not positioned, I still don't make profits and my analysis is worth shit.